Do you see Ethereum flipping Bitcoin at some point? And I mean, when I say at some point,
I'm having a hard time with that, because when I talk to sovereign wealth, I don't care if it's Norway or the UAE or Saudi, they want Bitcoin. They have not got to the analysis that we've just gone through. They want the proxy of Bitcoin, and they want that volatility.
In a recent interview with Crypto Banter, three market giants discuss what is probably one of the most popular debates in the cryptocurrency industry. Real Vision's Raoul Pal, Shark Tank star Kevin O'Leary, and Urian Timmer, the director of global macro at Fidelity Investments, take an in-depth look at Bitcoin and Ethereum, the world's largest cryptocurrencies by market cap. Because of the impending Ethereum merge, Raoul Pal, one of the most popular advocates of Ethereum and the Ethereum blockchain network, believes Ethereum now has the chance to flip Bitcoin. In fact, when he's asked, Pal confidently replies by saying, without question. But Kevin O'Leary, who has also invested in Ethereum and has given several interviews highlighting the pros of the world's second largest cryptocurrencies, believes that would be difficult. The reason for this assertion, according to O'Leary, is the interest of big money investors, especially sovereign wealth funds. Over the past 13 years, retail investors have championed the adoption of cryptocurrencies. About 2 years ago, Michael Saylor and MicroStrategy opened a small floodgate for institutions, but the industry is now ready for more. Everyone agrees that sovereign wealth funds will be the next market participants that would champion the next massive crypto rally. According to O'Leary, the world's largest sovereign wealth funds are all ready to get into the crypto space, but most of them prefer the leading crypto asset, which is Bitcoin. We will now take you to the highly insightful discussion as Pal discusses how the Ethereum merge will change the entire crypto and Web3 space. Please watch, like, and share this video. Also, ensure you drop your comments and observations in the comment section below and subscribe to the channel. Let's dive right in.
It's a turning point for crypto. That's what I think.
I totally agree. The point being is the big pools of capital, whether it's people like Apollo or Blackstone or BlackRock or everybody, sees yield, right? They didn't own gold because it didn't have a yield, and it's difficult for them because they have the hurdle rate we talked about before for so many of their clients. But it's a bigger story than that. It's much bigger than a supply and demand story. What we're actually creating is the benchmark interest rate for Web3. So this is the big daddy of which all risk will get priced against. Everything in the world is Treasuries plus or LIBOR plus, everything. Sure, in Europe, Italian spreads are Bunds plus. So we have an ability to now price risk. So how does this work? If I look at the Solana staking yield, which is higher than the expected ETH yield, once you adjust it for the volatility of the underlying currency, much as you would do with emerging market bonds, well, they match. So you've got pricing relativity. You can understand what's mispriced, what's not priced, where the risk actually lies. That creates an explosion in DeFi. Because once you have a proper yield curve, that you have and again, I'm going to use the term because people don't fucking understand it, is risk-free rate. The risk-free rate is the fact that the ETH yield will be guaranteed. What won't be guaranteed is the value of ETH. It's the same with the US dollar. If you buy US dollar bonds and you're a non-US investor, the bond yield will go, the currency will go up and down against you or in your favor. So this whole setup is much larger than anybody expects. If we want to see where DeFi goes, this is the big unlock. It's also the big unlock for institutions. It's the big unlock for pension funds, as long as Kevin said, regulation comes as well. This is a much larger impact than anything that's happened in this space since the launch of stable coins and the launch of Ethereum. That's how big it is to me. But it's not an overnight, you need to buy it now, it's going to go up immediately. I'm talking about structurally, you know, as Kevin said, as regulation eases, as people understand and have clarity, this becomes a monstrous asset for this entire new financial world.
Yeah. And if I could just add to that, if we can pull up the slide, you know, you look at valuation of ETH versus Bitcoin, you look at their S curves, and here I show the two S curves. You know, ETH basically crushes Bitcoin's, you know, adoption curve, and we all know why. It's more, you know, more programmable, but the valuation of Bitcoin is much higher. Like people are paying much more on a price to network basis for Bitcoin than they are for ETH, and I think part of the reason for that is, of course, the built-in scarcity and the decentralization, et cetera. But if some of the headline risk for ETH starts to dissipate based on the conversation we're having right now, and investors start to reward Ethereum more for its scalability, then you have potentially a lot of upside. I think also for Bitcoin, but maybe more for Ethereum.
Yeah, and they're very different assets as well.
Yeah.
Raoul Pal and Kevin OLeary agree on certain points, including the fact that we are at a turning point for the entire cryptocurrency space. Investors are getting more involved and knowledgeable about the mechanics of the industry, and there are fewer talks of everything collapsing overnight. This can easily be deduced from how long-term investors kept buying their preferred cryptocurrencies, despite the massive price declines caused by the bear market. Back to the discussion, you've heard from Raoul Pal about how the Ethereum merge will change the entire space. But he goes further by saying that Ethereum will flip Bitcoin without question. Let us know what you think about Pal's assertion while we bring you the rest of the discussion.
Do you see Ethereum flipping Bitcoin at some point? And I mean, when I say at some point,
without question.
I'm having a hard time with that because when I talk to sovereign wealth, I don't care if it's Norway or the UAE or Saudi, they want Bitcoin. They have not got to the analysis that we've just gone through. They want the proxy of Bitcoin, and they want that volatility. I think for financial services, I agree that the gas fees are a joke. That's the problem. This will help solve for it. But if that becomes the default platform for other digital assets, that will help. But in the immediate term, the demand is for 1% to 3% of a portfolio, a standard. These sovereign wealth portfolios look like this: no more than 20% in any one sector, no more than 5% in any one name. So you're never going to find, Boeing or Bank of America more than 5% in a $900 billion fund. All the indexers know that. It's a really standard format. When you ask them, if you could buy a digital asset, which one would it be and what allocation? It's about 50 basis points on the low end, up to 300 basis points on the high end. And 99% of the time they say Bitcoin. That's all they know. And so it's going to take a while for that demand to come. And I think it would be number two. And they certainly like USDC and they love Solana and Polygon. You go down the list based on market cap. I get it. But right now, if we had policy on Bitcoin, I swear to you, the price would be $60,000 in 2 weeks.
And Kevin, if you index like Bitwise is doing a basket of crypto, let's assume they're not ready, as you say, but when they come in, they're going to want that kind of product, right? Because then that gives them, because we don't know, like we've all got a bunch of positions. We don't know what's actually going to win here or not. We can all have opinions, but it means nothing until we find out. But surely there's going to be big demand for index product in this space at some point.
Except the really big guys do their own index. They basically, they rent indexers like me, and they say, design this. Because most often those commercial products are doing 20 basis points to 45 basis points. They're never going to pay that. You're lucky to get 2 basis points out of them. And so that you do the work, and then they have a custodial. And that's where it gets interesting, because Bitcoin trades 24 hours a day, and all the crypto does. And that's a new beast for the compliance departments of these giant funds. But the demand, I mean, the reason I'm long now with all this volatility, we have 20% of our operating company's assets, that's our max, in crypto across 32 positions. I'm about to add Pollen, which is a decentralized telco. We've done a lot of research on. We like it. We think there's a lot of interest there, but that's a really fringe project. The point is, I'm trying to get ahead of the day, because we're all agreeing that at some point we're going to get policy. I need to be long before that happens, because that's the reward you're going to get, is when that stuff gets indexed. And whoever gets to index it, the demand for at least Bitcoin and Ethereum out of the beginning is insatiable. It is insatiable at the sovereign and pension level. As for all the skeptics that are, don't like crypto, they're going to watch that asset move into an indexed price, which I think is $60,000.
The debate about which is the best cryptocurrency has been ongoing for a while now. Bitcoin maxis believe is the ultimate winner. Ethereum investors are also convinced that the crypto asset will someday take over Bitcoin's position as the leading crypto asset. At Savvy Finance, we are heavily invested in both crypto assets and believe that every win for Bitcoin or Ethereum is a win for the cryptocurrency industry as a whole. What do you think about Raoul Pal and Kevin OLeary's discussion? Please drop your thoughts, comments, and observations in the comment section below, and don't forget to give this video a thumbs up. Thanks for watching.